I know you're watching the moves in the market. Obviously, we tested those June lows, and you're saying we need to look at a new trading range for the market and maybe look at a new bottom, possibly.
Well, we've been saying for some time that the market was trading in a range. The bottom of the range is one that we went through yesterday, 3666. So we're a little bit below that. I think that the market's going to bounce today. The market doesn't care about hard numbers like that. Top of the range is back up, over 4,300, where we have been. But I think that the news from the Fed and their determination means that the market could go a little lower. On the other hand, at this point, we're down 24% from where we were at the beginning of the year. That discounts a lot of bad news. And so we still think that there's a good chance that we can have a rally here where 16 times 2023 earnings, 15 times 2024 earnings. And again, there are a lot of stocks that have had their own recession and bear market for months and months now, if not over a year. And that's part of the reason that we are feeling more optimistic about where stocks can go at this point.
All right, Kara, we have PCE coming out later this week. Obviously, that's the Fed's preferred inflation gauge. We know the direction the Fed's planning to go to. The question is whether PCE will change their mind at all. A lot of people don't think so. But will a better than expected PCE report change the mind of the market and make people perhaps more bullish?
Oh, definitely. We know that if it's worse, the market's not going to be happy. I mean, look what happened when we were at 8.3% versus 8.1%. I mean, it was incredible. The market's lost, I think, 10% of its value. So anything better, I think, is to some extent a requirement for the market to hold in here. And we believe that there will be some improvement in the numbers. I think people are looking for something better than 6.3. Hopefully it's 6.1 or 6.0. We know that oil prices have gone down. And there is some effect that the housing market is seeing. There's not a lot of houses that are moving. We're going to know more about housing this week, and we'll see something about the price level. But if houses don't move at a certain point, the sellers do lower their selling price if they really need to move that house off the market. So there should be improvement there. There's been commodity prices other than oil that have gone down. Shipping costs have gone down. There's been more discounting at retail. So there should be an effect, and the Fed definitely has raised rates enough, so people are feeling the pain in the housing market on mortgages and on loans for cars and large appliances. So yes, there should be some effect, and the market today would be anticipating that, we think.
All right, Kara, before we let you go, we got to get to your stock picks. Let's start off with PayPal. What makes you so, has PayPal as one of the stocks that you want to buy right now?
Yeah, exactly. So PayPal is one of the worst performing names if you look over the last year and a half in the S&P. I mean, it's really fallen tremendously, over 70%. Now, that is because it was a huge beneficiary during COVID. Now it's selling for 17 times forward earnings. There's a lot of cost control. There's an activist investor in that Elliott Management. And, we believe that this is a time that you can look for PayPal to really accelerate the sales growth. They have said so in the past call. Sales growth going forward over the next year should be mid-teens. And this is an attractive stock right here on a cash flow basis. It's a value stock, even though it's been a growth name for, the past 5 years.
All right, almost out of time. But if you want to give us one or two more of your picks, one that caught my ear was O'Reilly is one of your picks.
Yeah, O'Reilly has held up very well. It's been a very good stock this year. People have not bought as many new cars because they haven't been available. They haven't even bought used cars. So they fixed up their old car. And O'Reilly benefits from that because that's the business they're in. And they've been able to increase market share. Their stores have been busy on the same store basis. And this is a name that, we think people feel comfortable with in an unsure environment.